Good afternoon, and thank you to the International Capital Market Association for having me here today, albeit virtually, and to the Monetary Authority of Singapore for co-hosting this event. ICMA has been a pioneer in sustainable finance, and the work they have done to develop standards for sustainable bonds has been foundational for the growth of climate-aligned finance. I'm delighted to be with you today to talk about the financial sector's critical role alongside governments, businesses, and civil society to support the net zero transition of the entire global economy. The latest IPCC report warns us that time is quickly running out to keep within the 1.5-degree threshold, and that accelerated action is needed. We are seeing more examples of extreme and persistent heat waves, worsening droughts, leading to more severe wildfires, more frequent extreme storms and floods, and rising sea levels, all of which scientists tell us are increasingly attributable to our changing climate. These physical impacts already have real economic consequences and will continue to threaten financial stability as they worsen over time. I came to focus on climate after a long career as a financial regulator, including during the global financial crisis, which exposed me to the challenges of building a more resilient financial system. Climate change is a risk we cannot diversify away from, and so addressing this risk will require a transformation of the entire economy and the biggest restructuring of our energy system since the Industrial Revolution. The challenge is that we need to do this at a pace more like the digital revolution, while ensuring that all communities have access to clean, reliable, and affordable energy. Countries representing over 90% of global GDP have now made net zero commitments, and they are increasingly putting in place the policies to back those commitments. With clear direction in policy, the shape of the transition is also becoming clearer, which means that there is meaningful risk to those companies that do not account for the transition in their business strategies. But despite the unimpeachable business logic behind sustainability and the multi-trillion-dollar opportunities around the energy transition, we are still moving far too slowly to decarbonize our economies and reduce the 50 billion tons of greenhouse gases we emit each year. That is the background against which GFANZ was launched 2 years ago in the run-up to COP26. From the start, the vision for GFANZ has been to bring together the entire value chain of the net zero committed financial sector: banks, asset owners, asset managers, insurers, financial services providers, and others, to address shared challenges, most notably developing the common tools and frameworks needed to deliver on net zero commitments. Today, over 570 financial institutions across more than 50 countries, comprising over 40% of global private finance, have committed to net zero. And the coalition continues to grow despite the pushback against addressing climate risk in some places, with more financial institutions recognizing the business imperative of aligning with the net zero transition, including the recent launch of the Venture Capital Alliance in April. Moreover, to ensure that the GFANZ coalition becomes truly global, last year we launched regional networks in Africa and Asia, and will launch a network in Latin America later this year. Each financial institution joining a net zero alliance commits to robust and ambitious sector-specific criteria, including independently setting science-based near-term targets and achieving net zero emissions by 2050 or sooner. They also commit to report their progress annually. To achieve long-term commitments and near-term targets, companies need a plan. A robust transition plan is central to demonstrating the credibility and integrity of net zero commitments. But every business needs a strategy for how it will navigate the risks of climate change and seize the economic opportunities from the net zero transition. In 2021, the year of mainstreaming net zero commitments, and 2022, the year of target setting and developing frameworks to operationalize these commitments, leads us to 2023, the year of transition plans. Last year, GFANZ created a net zero transition plan framework that has broad application for both financial institutions and corporates, building on the Task Force on Climate-Related Financial Disclosures, or TCFD's recommendations on transition plans. The GFANZ Transition Plan Framework can help financial institutions across all sectors, as well as the companies they lend to or invest in or underwrite, to implement their own transition plans and measure progress in a consistent way. It identifies 10 components of a transition plan grouped into 5 themes: governance, or ensuring that there's accountability, incentives, and proper training for meeting the transition plan objectives at all levels of the organization. 2, objectives and priority setting, or translating the long-term commitment into specific targets and a high-level strategy to achieve them. 3, implementation strategy, or how you work across the business to align products and services, decision-making processes, and organization-wide policies with transition objectives. 4, engagement strategy, or how you align your engagement with the public sector, industry peers, and your clients and portfolio companies with transition objectives. 5, finally, metrics and targets, or how you're measuring progress. Importantly, the framework also lays out 4 key strategies for financing real economy decarbonization. The first is to support climate solutions, the technologies and products that will enable the economy to decarbonize. The second is to finance business models already aligned with a science-based pathway to achieve net zero. The third strategy is going where the emissions are and backing those companies with credible transition plans to converge with a science-based decarbonization pathway. The world cannot divest its way to net zero. And finally, climate transition means backing the managed phase-out of those high-emitting assets otherwise at risk of being stranded in the transition to net zero. These aren't one-size-fits-all rules. Every institution will need to define its own path based on its business model, client base, and regulatory exposures. Sustainable bonds, such as green, sustainability-linked, social, and sustainability bonds, are an essential tool for allocating capital to support climate solutions and companies' transition to net zero. ICMA's Climate Transition Finance Handbook provides guidance for market participants on raising funds in debt markets specifically for climate transition initiatives, which includes issuers' plans to align with net zero pathways and disclose their strategies for doing so, and progress along the way in line with the recommendations of the TCFD. As financial institutions look to scale transition finance and companies themselves look to fund their own transition strategies, we expect to see greater issuance of sustainable debt instruments for transition purposes. I believe it's essential that financial institutions work with their clients and the companies they invest in to ensure that these instruments are backed by comprehensive, credible, and comparable transition plans. The GFANZ Net Zero Transition Plan Framework provides a global baseline that all organizations can use to develop their own transition plan. Our report on expectations for real economy transition plans provides helpful guidance from the perspective of net zero committed financial institutions on what is needed from real economy companies' own transition plans. And to further supplement these resources, we have also released guidance on the use of sectoral pathways by financial institutions. Collectively, these resources should help both issuers and financial institutions ensure that transition bonds are credible and will help finance strategies that reduce real-world emissions. It is increasingly clear that the net zero transition is well underway, but we need greater clarity from all parties, including governments, financial institutions, and corporates from across the economy, on the steps they are taking to get there. As financial institutions develop their transition plans and scale transition finance, they will continue to rely on instruments like sustainable bonds, and that is why it is so essential that such bonds are underpinned by transition plans aligned with science-based net zero pathways. We hope that the GFAN's transition plan framework serves as a key resource for engaging with issuers on their transition plans. And of course, we hope that all of your institutions, as leaders in sustainable finance, develop your own comprehensive, credible, and comparable transition plans. Thank you.